Welcome back to the channel. My name is Patrick, and in today's video I'm going to recap what I did yesterday, which was a Monday. I typically don't do well on Mondays, but I was able to catch 2 trades and I won both of those trades. However, they were not straightforward. Okay, the first one was, the second one not so. So I'm going to explain to you what happened yesterday and the way I'm starting to look at the market. And to be fair, it is a fair way to view the markets. Okay, it's not to spread fear, but what we need to understand is we are small participants in this market. We do not move the market. No matter the amount of trades or how much lots I place and the leverage I use, I do not move the market. No retail traders move the market based on our order size. The banks do. Okay, so they completely control the market. They move it up and down, and they also manipulate the market. And the reason is to basically make money. Money is made when someone loses trades, and they need to create a trading platform for us to be able environment for us to be able to trade and speculate whether we think the price is going up and down. That's why they don't just take price straight up and take it straight down. They move it in these small little trend-like zigzag formations, enticing us into the market and eventually taking us out. So I have to have realistic expectations when I'm taking trades, and that's why I scalp. Okay, I just want to get what I came for and get out. So whether you consider a scalp a 20 pip move or you consider a 5 pip move, whatever suits you, whatever you came to get in that market, get what you want and get out. Do not be greedy. Okay, that's advice. That I rarely give advice on this channel. I really just share my experience. Do not be greedy. The longer you stick around, the more likely you could lose a trade. Okay, so let's get started. So Monday, hate Mondays, it gapped up. Okay, started trending up. Straight away I'm looking for a sell. Okay, so I just need an indication. I don't look at indicators. I need an indication based on price action. So I've gotten used to just viewing this because I've traded the same setup. So we've got a low here from the Asia session. We've got a higher low because it's above this previous one, creates another higher low above this one, and eventually creates a higher there, pulls back, creating a higher low again, and it's trending, right? It's trending up. Cool. It gets to this point here, the last high, it pushes up like it wants to go further, pulls here, and from this point it's meant to go, but it breaks structure. Okay, cool. So previously what I prefer to see is a little pull down, flag, then break structure. So I was a bit skeptical taking this trade. However, what I noticed, which you should be able to see if you're paying attention, is when price breaks out of a zone, it usually pulls back into it. Some of you know this as a break and retest. It breaks out of the zone, it usually flags back into it and goes again. So I had that expectation. When I saw this little fake breakout, I expected this to pull back here. So I took a trade, entering roughly around here. It should be, yeah, snap. That's my pivot point. Entering exactly there. Entering there to drive it down. And all I was asking for in this situation was for 6 pips. Okay, and I was risking 7 pips. A negative risk to reward ratio. However, I know once it gets into this demand, it could push off. Okay, so it reacted on this demand, it did pull up, and however it stopped. Okay, so my first trade was that. The second trade was the fact that it stopped here. It failed to create a high from here, so it actually came and created a low. So we have a high, a low, a lower high, and a lower low. Okay, so this is a breaking structure. Now this is the setup I normally take. This is what I should have waited for, and this would be my first trade. So what I should have done was wait for price to pull back in to this zone here, which is also the key price point from here, pull back into there and entered based on this this imbalance here. Okay, this breakout candle, this candle that broke that low, that led to the breaking that low, that's where I should have entered. But my earliest entry is from the breakout point of this low. So I entered it, right? And now I'm risking 15 pips because that's the max I'm allowed to, willing to risk. So I'm risking 15 pips. So I adjust my lot size so I'm not risking it as much as I would normally. And in this situation, again, I'm looking for it to just do a modest move. However, it kept me in the move for a very long time. So I got into the move roughly around 11 o'clock. It wasn't until 3 o'clock it moved, and it just gave me enough. Okay, it gave 9 pips, but I only needed 6. My realistic expectations, not that 6 is all you could get, is because I believe that if it pulled into this demand now, it could go off. Now, why I believe that is quite simple. If you're following the trend and you are trailing this move, your stop loss is underneath here. It breaks out, comes here and breaks up here. Where's your stop loss? Underneath there. Okay, so as it pulled back in here, anyone who's still buying this, who would have bought this, maybe bought it from here, think it's going to break out again, it pulled into here. I assume that this was looking to run this. Okay, so I'm looking at price action, and that's what I'm basing off. So price stuck here a long time. It was very hard for me to hold this move, especially after having one winning trade. I held it long enough, and it just done enough just to break that low. Then it went. So when my stop loss was here, I would have lost if I stuck around any longer. And the people who tried to trade it up, they were right. It was moving up. However, it came and stopped you out if you were trailing it there. Okay, it stopped you out before it went. And why is this? Because back to what I said, we are small fish in a big pond full of sharks. Okay, they are trying to make the money by us losing money. So realistic expectations is what I base my TP on. Where am I satisfied at? And if that means it's a negative risk to reward ratio and I need to adjust my numbers so I get what I'm okay with, but I don't lose more than I'm happy with, I will do so. With a negative risk reward ratio, you do actually catch more trends on average, catch more wins on average than losses. So even though it is a negative thing, on average, if you got an 80% win rate, you are still profitable. So it works for me. It's not a recommendation, it works for me. So I was able to catch 2 trades using this knowledge. So that's the first trade, took it from there, the top's there, took it down, got out when it got to this demand, came up here, and that should have been me done. But as it broke this structure, I was interested in getting back in to see if it will break this low, which it did. And once it did, I got out straight away. I didn't wait for the additional 2 or 3 pips. I didn't wait for it to go all the way down to the price point I believe it's going to. I believe it's going to fill this gap. I didn't wait for that because it was Monday. Mondays typically are slow, and to get down here in New York session wasn't likely. New York session was more likely to run me out, which it did. So I was trying to get out as soon as I could. Okay, so now that was the 2 trades. I just wanted to explain something. What you see here, what I trade here on the smaller time frame, is the same thing that's going on the higher time frame. So why did price go all the way up here? Well, basically, if we go to H1, we could see. So it's trending down on the higher time frame. We can see that clearly. So at this point here, you can see it hits something and turns around and starts breaking structure and starts moving down, right? Let me just get rid of some of this. Okay, so it hit something and starts moving down. Where did it hit? It hit the breakout point of this last reversal attempt. This was the last reversal attempt. This candle that broke it here, what did it do? It didn't reverse here like I would have expected it to. It came and in the Asian session shot up, tapped into there, then started moving down. And the reason it did that is based on order flow. There's potentially a lot of unfulfilled orders here because price moved so fast and broke that zone. So when it goes back up there, it was filling those orders, and now those orders are filled, it could go further down. We don't know, that's too much speculation. I focus on what's going on in front of me. But the point being is this is the same thing. Pole, flag, pole, flag, pole, flag, and so on. And you could base, if you're swing trading, you could base your entries on the higher time frame, and you could do the same thing. I don't swing trade because I do not hold moves that long. I get in, I get out, so I'm on the lower time frames. Okay, so people, hope this has been useful for you. I am back to my normal schedule routine. Kids are in school, so I should be able to post more often, and I'm going to try to get some posts, more videos out to you guys. So if you find this useful, hit the like button, hit the subscribe button, stay tuned, and keep these videos coming. If you have any questions, let me know in the comment section. All of them are valid and they are useful. If I have to go into something in detail, I will do so and maybe release a video based on that. Okay, any questions, let me know. This is Patrick signing out. Until next time, peace.